Welcome to a new episode of Open and Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and hopefully get a lot smarter. Here with me now is Citi's Director of U.S. Equity Strategy, Drew Pettit. Drew, good to see you. Longtime follower of your research. Thank you for hopping on Opening Bid. Let's start on some of that research. I think it was like 2.5 weeks ago. I wake up in the morning very early like you do, I know. And I see this really good note from you talking about euphoria and bubbles and AI stocks. I'm like, you know what? Let's put that off to the side because I think Drew's onto something. Let's get this guy on the show. And, kudos to you because at least in the short term, you called a short-term top in these AI stocks and various tech names. But what are some of the warning signs you continue to see in this space? You talk a little bit about in your note. I know we've seen a sell-off in the space a little bit, so maybe that euphoria has died off some, but I imagine you're still seeing warning signs out there.
Yeah, so I'll give you the simple warning signs. It's when price moves really, really, really fast, and you hear from a lot of people, again, qualitatively anyways, that I have to own these names, I have to be in these names. I have risk if I don't buy this. So those are some really simple warning signs. But from my perspective, sticking to a more fundamental approach, it's when that price moves so much faster than we humans think the fundamentals are going to improve. So honestly, structurally, we like AI. We do think it's a game changer. It's one of our top themes, but it's how you want to invest in it when you get these wild, crazy upside price moves. Because honestly, greed, well, that much greed is probably not good when you're playing around in this space.
Everyone from Wall Street analysts to retail investors can't seem to stop talking about it. The AI-driven chipmaker has posted gains that many deemed unimaginable. Imagine a company whose valuation rocketed so high, it briefly became the world's most valuable, eclipsing even the titans like Microsoft. But is this just another bubble, or does Nvidia have the staying power to remain ahead? Let's delve into what makes Nvidia a standout in today's high-stakes stock market environment. And most notably, should you keep investing your money in the firm's stock? In today's video, we will explain why you should keep betting very big on Nvidia despite its recent dip. So please don't miss out. But first, if you want to keep up with Nvidia latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, I don't care what Gordon Gekko says. Sometimes greed is not good. I mean, look, Drew, I mean, as a strategist, how hard is it to come out with a call or analysis like that when, to your point, everybody's saying, oh my God, I have to own NVIDIA. My whole net worth needs to be tied up in NVIDIA and these 12 other AI stocks. I mean, you don't put a note out like that lightly.
No, you got to stick to your guns a little bit. And honestly, we've had this framework for over a year that we've been building out because we actually don't think it's right to just sell stocks that could be transformative just because they have some high traditional valuation metric. To be honest with you, that's how you miss really good investments. If you say, oh, this stock has a PE over 20, 25, I can't own it, that's wrong. But at the same time, if a stock is trading at a point where the market's pricing in 40, 50% growth, and when you really look at it, okay, maybe 25, 30% is realistic, then you gotta take some gains, you gotta trim something back. So it's not like you can't buy these stocks at certain times. It's just, don't be over concentrated in them. Like it's boring. It's not fun to talk to people about risk management on single names that are
it's fun to me, Drew.
But
it's fun to me. It's very sexy to me. All right, keep going.
Yeah.
Keep going.
But no, just it is boring. You do get a lot of pushback. You get labeled as this big bear, and you're just kind of sitting here. It's not if, it's kind of when. When do you want to own these stocks, and when do you want to have a lot of them?
Nvidia's impressive 149% surge this year may seem like just another fleeting market sensation, but upon closer inspection, it's evident that there's more to Nvidia's story than meets the eye, and it's shaping up to be a masterpiece. To anyone who understands the intricacies of semiconductor technology, Nvidia's success is not solely due to luck. The key to their rapid ascendancy lies in their sophisticated semiconductors. Nvidia's Hopper architecture encapsulated within its famed H100 and H200 chips, has set new benchmarks in AI workloads. These chips are not just fast, they're transformative. Large corporations such as Microsoft have integrated these chips into their Azure services, fortifying the platform's AI capabilities. Microsoft did not just dip their toes in the Nvidia pool. They've immersed themselves, increasing capital expenditure to secure these vital components. Why such aggressive investment? Nvidia's chips are simply unparalleled. When Nvidia announced the upcoming Blackwell series for release in late 2024, investors' enthusiasm hit a fever pitch. These new AI chips promise to dwarf even the best offerings from competitors like AMD and Intel, making Nvidia's tech a compelling argument for its continued market dominance. The stock market is not without its rhythms, and Nvidia's valuations have not been immune to the tune of market volatility. Toward the end of the second quarter, Nvidia's valuation briefly eclipsed Microsoft, momentarily making it the world's most valuable company with a staggering market cap of $3.3 trillion. However, this rapid ascension stoked the flames of investor caution. Many chose to cash in, leading to a pullback where Nvidia shed $300 billion in value. With volatile U.S.-China trade relations and the cyclical nature of technology equities trimming stakes, Nvidia's stock took a 3.6% dip over 10 days and another 2% over the past month. So why do many investors keep dumping their money in the stock despite this blow? Let's answer this. Hello everyone, and welcome back to Investocracy.
Tell me if you agree with me or I'm off. I get the sense when it comes to AI, most investors have no clue what these companies do, and they really don't know why they're buying these stocks just because, if anything, maybe their neighbor is buying these stocks.
Yeah, I think a little bit of that is true. In the professional community, this sounds weird, but I don't think people on the buy side and even some of the sell siders that cover these industries really know what these companies are going to look like in 5 years. We can talk about whatever chip they have today and whatever their product they're trying to train and do in this instance, but the market's pricing out what that company is going to become. And I think that's difficult. So Main Street might not know exactly what they do. And I can tell you right now, Wall Street probably doesn't know what these things are going to become.
That's absolutely terrifying. So what happens next?
Yeah, look, I think what we're seeing right now is really, really healthy. Those big names, the big winners, the Nvidias, the TSMCs, the Microsofts of the world have this pullback to get you closer to reality. I think that's step one. And then step two, it's almost happened at the same time. It's the smaller companies, like I'll give you a couple semiconductor names, Teradyne and MKSI Instruments. Those stocks are actually holding up pretty well. So to me, you see a broadening of AI because it can't just be one or two names that win for this to be the next big thing. This has to pull along way more stocks, way more types of companies. So we're starting to see that. I think that's really important in the AI rally.
Some see this dip as an opportunity rather than a setback. The stock's slight descent has presented a golden buying opportunity for those bullish on Nvidia's future. One could even say Nvidia's stock price fluctuates like a tech nerd trying to decide between the latest iPhone and a high-end gaming PC. And what a fun dilemma that is. When the stakes are this high, every wiggle in Nvidia's valuation can almost feel like part of a thrilling high-stakes game show. On a more serious note, despite the pullback, the raw performance and relentless innovation at Nvidia offer a cushion of optimism that many competitors lack. Given its consistent overperformance against Wall Street's predictions, Nvidia is not just another chip maker, it's reshaping the industry's very future. Additionally, Nvidia isn't merely riding the AI wave, it's making the wave. Analysts are grappling with how to accurately value Nvidia long-term, given its exceptional performance. According to Koifin, Nvidia trades at a forward P/E ratio of 43.1 times, which, while high, is comparable to AMD's 41.04 times. Given Intel's relatively modest 30.74 times, or Nvidia's valuation does stretch the bounds of traditional benchmarks, but not irrationally so. However, let's not forget, AI isn't just a fad. numerous industries, from healthcare and finance to automotive and entertainment, are increasingly relying on AI for innovation and efficiency. NVIDIA's strength isn't just in its current product line, but in its relentless pursuit of next-gen technologies. Also, their anticipated Blackwell series underscores this pursuit. The forecast for AI isn't showing any signs of cooling down. In fact, it's heating up. As large enterprises like Microsoft continue to pour capital into AI-enhancing technologies, NVIDIA's role as a key enabler becomes more indispensable. And as the stock market has experienced the influence of social media, particularly Twitter, in shaping investor sentiment. A July tweet from financial analyst John Doe humorously pointed out, "If you thought Tesla was the only roller coaster in the stock market, NVIDIA just opened a theme park." While humorously phrased, this tweet captured the essence of NVIDIA's market presence: volatile yet undeniably exhilarating. Social sentiment plays a subtle yet significant role in market dynamics. NVIDIA's stock isn't just buoyed by institutional investors, but also by a robust retail investment community, drawn to its compelling narrative and breathtaking innovations. So what should be expected next for NVIDIA's stock? But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Has some form of bubble burst? And of course, leave it to a journalist to try to predict or talk about some doom and gloom. Or is this just the start of something more of a rout in AI stocks? The time where, let's say, Nvidia reports in a couple weeks, they blow it away on earnings, give upbeat guidance, and the stock doesn't react like the past 3 Nvidia quarters.
Yeah, see, I'm not sure we're at bubble yet. I'm a little hesitant to use that word just because the big difference between now and the tech bubble is exactly what you said. NVIDIA is beating earnings. It actually has earnings. That's a good starting point. And then number 2, it's raising guidance. To me, the concern and when this becomes a real rout is when those types of stocks beat and don't raise. Because our work tells us that those companies need both. They need to beat and raise, and they need to do it for the next couple of years, to be honest with you. So the rout comes when both don't happen at the same time.
As we stand at the cusp of 2024, NVIDIA's trajectory appears set to reach new heights. The company has not only demonstrated an unparalleled ability to innovate, but has also maintained a strategic edge that rivals find hard to challenge. Its Hopper and soon-to-be-released Blackwell chips keep the company at the forefront of AI advancements, ensuring that its influence in the chip-making industry remains robust. Currently, NVIDIA may be experiencing some volatility, but savvy investors recognize these moments as windows of opportunity. As of now, NVIDIA holds a prominent position, comfortably seated with a market cap just over $2.78 trillion. Analyst forecasts indicate that this is far from the peak. With the AI industry poised for explosive growth, NVIDIA's foundational role within it makes NVIDIA an exceptionally promising stock. So, what do you think about NVIDIA's potential? Are you ready to add a slice of this tech powerhouse to your portfolio? Drop your thoughts in the comments, and let's discuss why NVIDIA might just be the golden ticket for your investments in 2024 and 2025. In a market landscape often riddled with uncertainty, NVIDIA offers a compelling narrative of consistent innovation and market agility. As we move forward, keeping a close eye on NVIDIA seems not just prudent, but essential for anyone looking to invest in the future of technology and AI. If you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.